Hello, welcome to my channel. Today I'm going to be speaking with you on how to build wealth. The side plus I'm going to be adding is the role of your tax back in building wealth. These are elementary baby steps that you can apply, and they take you step by step into building wealth. The first thing you're going to realize is that you become debt free. Then you stop living from paycheck to paycheck. You have enough money for emergency funds. Then you start building wealth. And then you progress to building generational wealth. So sit with me and listen back as I mention these few points. Don't worry, nothing hectic, just something you can actually practice. So, of course, the first thing I'm going to be mentioning is having an income, right? So, if you don't have a job, if you don't have a source of revenue, it's going to be difficult to build wealth. Now, if you're a student or somebody in a special position whereby you're not earning income, still listen to me. If you're having what do you call it? If you're having pocket money, that's what they call it, like in Nigeria, right? And somebody like, or your friends, your family, your parents friends give you some sort of money, that's still a form of income. So you can still apply these principles, right? So the first step you're going to do is have an income. It might not be that dream job yet, but make sure you have a source of income. If you've been trying to get a job and it has not been fruitful, there are other things you can do, like you could convert your passion into a source of income, right? That's a different topic, but make sure you have something that is bringing in money to you every month, or at least maybe quarterly. Like if you're self-employed, it might not be monthly, but of course you know that there's a source of income coming in. That's the first step to building. But can you build anything out of nothing? Perhaps with a miracle. So the next thing is gonna be is you pay off your debts, right? And when you're paying debts, it's advisable to start off with paying in debts that have a higher interest, right? If you know your income cannot suffice to paying off all your debt at the same time, right? Then you start with the ones that actually have a higher interest. And then there are some debt that are like interest free, right? Some people are lucky to get those kind of debts. And then you know that if you can't pay off all your debt at once, you start with the ones with high interest, but you need to avoid those ones without interest. Also tilting your credit history, your credit worthiness, or eventually accumulating to some sort of extra funds that you would have to pay. So you read your terms clearly. The next thing I'm going to be talking about is apply credit wisely. So while it is good to take credit to help balance your life, especially at a point where you might need it, it's advisable to use it wisely. Preferably use your credit cards, right, to build yourself to be credit worthy. In some parts of the world, right, you can't get a loan, you can't get a mortgage, you can't get certain things without being credit worthy. So even if you're debt averse, you're risk adverse, there's you will be limited in how far you can grow if you don't build yourself to be credit worthy. So how do you use your credit wisely? You can use your credit wisely by getting a credit card and only using it with the kind of money you know you can pay back. So some people, they do a kind of credit card where they fund it and then they take money that they funded with it to purchase, right? That's not the same case for everybody. Some people, they spend it just to build their credit history and then they replace it back immediately, while some people is at the end of the month, right? So that's another way you can um move yourself towards building wealth, right? So when you apply your credit wisely, by applying the way that makes you credit worthy, and that when you take it, you replace it back. I mean, if you don't have it immediately, there are special situations whereby people might not be able to pull back immediately what they've taken. Make sure that when time and your income comes in, right, you're able to pay your debt, right? And you try to avoid it getting into interest, right? So most credit cards have a period whereby you're supposed to pay it for, and then if you don't, they charge interest, and after that they start charging you minimum balance. Never allow yourself to fall into minimum balance, right? Because you end up paying more than you actually owe, right? So the next thing I'm going to talk about is live within your means. So even if you are earning a lot and you can afford certain things, you have to ask yourself, is this a need, is this a want, right? If it's possible for you to forego that thing, then forego it, right? I know some people are going to tell me, YOLO, you only live once. Yes, sometimes you can splurge, you can spoil yourself, but that should not be a lifestyle. Don't make splurging a lifestyle for you, right? Spend within your means. So even when you can afford something, sometimes deny yourself of that thing, right? As long as there's a substitute. Like, what can I give as an example now, right? not every day turkey. Like if you can eat chicken sometimes, eat chicken. I don't know if that's the right example to give for now, but that's just the thing I can think of, right? If something is overpriced and there's a substitute that can fit in for that particular situation, or maybe another example, there are different drinks. You've been buying the $5 drink, and then there's this $50 one, right? That tastes so good, so good, and then you got between five. There's a $5 one that can suffice for it. Also, look at the risk of high sugar intake, right? Healthy lifestyle. Like there's a whole lot of advantage in like not taking pop and soda regularly, right? And then take the one that you can actually afford. Few times when you just feel tired, you just want to spoil yourself, you can just go for the $50 one, right? YOLO, you only live once. But apply YOLO wisely, right? So that's the other thing I'm going to talk to you. Make sure you live YOLO means then it becomes a lifestyle, right? Something you can maintain and you're able to build for emergency funds, right? Next thing I'm going to actually talk about is the emergency fund. So there are different principles on how to build your emergency fund. Some people say ensure that you have a separate account whereby you have 3 to 6 months. Some people say 3 months, some people say 6 months, right? Advisable start with 3 months. Then when you have up to 3 months in a separate account where you know you're not going to touch, you can see if it's possible for you to move to 6 months. And then when you have 6 months, you know that you're secured, right? So have an emergency fund. It's dependent on you now if you want to convert this emergency funds to investments, but be wise about it. I would say if you're doing your emergency fund as an investment, make sure it's an investment you have access to. So different countries and different places have different forms of investment. Like some people, they put their emergency fund in a regular savings account. Some people, they put it in a tax sheltered account. If you're putting it in a regular savings account for somewhere like Canada, for example, you want to be sure that the interest that's accumulating on it, you're not going to be taxed back again, right, at the end of the year, right? If it's the tax sheltered account, you want to be sure that the kind of investment it is something you have access to that money, right? There are different forms of tax-free savings account investment, right? Some they are logged in, you can't just go into it because your capital will have depreciated. You definitely don't want to do that kind of investment for an emergency fund, right? You can do a regular bank tax free savings accounts for emergency fund where you know that you can just get the money, right? Not GIC logged in or anything, just savings. So most of them are called our interest savings, right? It's like your regular savings, but it's for TFSs, for tax free savings account. And you know that even if you're getting that interest on that, it's not going to be taxed at the end of the year. And then you have access to that fund readily. You're not going to put it in something like stocks, investments, index funds, all those things, right? You're going to just put it something that you have access to because it's an emergency fund, right? You don't want to be caught stranded when you need this money, right? So when you've practiced all these steps, which are very major, then you can go into like the next step. Remember what I said: have an income, be debt free, start building wealth, build generational wealth. That's the kind of pathway that we're gonna like follow in terms of building wealth, right? These tips. So the next thing you want to think of is having a passive income, right? If you really want to build wealth, you have to have either a very high paying income or you have to have other sources of income. You could do both, right? Have passive incomes. Like some people, their passive income is actually investments. It can be stocks, right? It can be their passion, right? Some people, their major job is their passion. Some people, their passion is their passive income, right? Depending on what this is, it could be a book you put on Amazon that is fetching you something. It could be like you have your main job and then you're a photographer, you did that on weekend, you know that's coming in. It could be that you do Uber when you're coming from work, you just pick people on your way. There are so many things that can serve as source of revenue for you. You just have to be creative. And if you're not creative enough, you can listen to other people who have it and get ideas from them, but have a passive source of income. So when you have passive source of income, then you're on your way to building more wealth, right? So have a passive source of income, and then you can have multiple streams of income. If you have multiple streams of income, right? I always say my dream life is this income is for this income is for that, this income is for this, right? I myself am getting there, right? So you can do that also. Like, you know that this income is for my car, this income is for eat out, this income is for household. Like you can have multiple streams of income, and depending on what you want to use that multiple stream of income for, then you can have that choice. Because even me, even with one stream of income, I'm still thinking. You know, like you have to be very best. You know, YOLO or YOLO wisely, right? So have multiple streams of income. With that, you can even know that this income from this place is going into this investment. This income is going into this investment, right? So that is it. Then also, I want you to take advantage of sales. that vacuum cleaner you want to buy, can you wait in Black Friday? Can you wait in Boxing Day sales? Can you wait in a particular time? Especially if you have stores you're registered with that send you their notice and everything on unexpected sales period. Also, note the item when you are taking advantage of sales period. Don't buy what you don't need just because it looks cheap, right? Sales are for things you need, so actually know that you need that thing. Don't just buy things and just go for them and because they are on sale and they look cheap, right? Make sure it's an essential, it's something you need. So before a period of sale, you should already know that this is the item I'm looking for. When you go to the store or when you're checking online, you know that this is a specific thing that I want to buy, I want to purchase, and that's what I'm looking out for if it's on sales, or I am here because this item is on sales, right? So take advantage of sales, but only take advantage of it wisely, in the sense that you actually purchase things that you need, right? So also avoid fees where applicable. For example, if you want to get a credit card, there are different types of credit cards. Some don't have fees, right? So go for the ones that don't have fees if you can. Some people go for the ones that have fees because it pays them, like they can build up. Most credit cards you can still build up points, but some they have travel points, and when you compare the fees in comparison to how it saves them in traveling, well, like it might be minimal. So depending on your situation, right? So avoid like fees when you can avoid them, right? Even if you watch my video on negotiation and dollar cost averaging, those are some other things that can really help you, right? Especially the one for negotiation, you would see also how you can save costs by avoiding certain fees that are avoidable, right? Even some bank accounts, if you ask questions, like there are some that you can avoid fees, the monthly fees, the annual fees. Also, you can take advantage of certain things. Some banks, if you have a certain limit, you waive off the fee. If you're joint, if it's this, if it's that, like make sure you read the fine print and you research, right, before just because $5 here, $10 here, $50, it actually accumulates. And like I say, those small money can actually go into investment. They can go into dollar cost averaging investment. Watch my video on that to know more on that, right? So avoid fees when you can, right? So the next thing I'm going to talk to you about is start investing. So when you have all this, right, start investing. You can invest little by little, right? It could be $5 this week, $5 next week, $5 this month, right? For more on investing and how to take advantage of what you have to start now, you can watch my video on dollar cost averaging and money 101. You see a lot of good pointers there. So start investing. You're on your path to building wealth. You're also on your path to building generational wealth with this, right? So the other thing I actually forgot to mention when I was talking about credit, which I highlighted, right? In using your credit wisely, ensure that you're using your credit to build equity, right? So make sure your credit is working for you, right? Not as much as it's helping you pay some bills, right? Make sure it's also working for you to build equity in making yourself credit worthy, right? So the next thing I'm going to talk about is have an insurance, right? And when you're getting insurance, I'm going to do a separate video on that, on insurance and how they apply to your kind of put where you are, right? Insurance can be for anything. It can be for retirement, it can be for debt, it can be for your beneficiary, for like the people you're going to leave behind, right? Make sure the insurance you're getting is because you actually need it. So read the fine print and let it apply to your situation. Don't go and do something that, like, there are different kinds of insurance. There's term, there's life, there's like, right? So okay, or you don't know, right? So but make sure that what you're doing actually fits purpose, right? You don't want to do an insurance of 5 years when really what you're looking for is money you're going to leave behind if anything happens to you, and you'll be able to pay off your debt and also help you in retirement. That would not be the kind of, it would most likely be something like permanent you're looking for, not a term, like 5, 10, 15 or more term insurance, right? So make sure it applies to you. But if you feel like something happened in the next 5 years, you really want to, like, you want to be able to cater for it, then you can do like a 10, 5, 10, 20 years, that kind of thing. So make sure that you're not just getting insurance that is cheap and because is a fad, or you feel it's a fad. Make sure it's actually a need, right? Make sure it is a need. It actually meets your need. So you are doing it out of necessity, out of the fact that you've identified why you need this thing and you're going for it, right? Ensure it is working for you. It is what you need, right? So make sure you have insurance. Insurance is a way of also building wealth for yourself and also generational wealth, right? I always say this in almost all my videos because they are very, very crucial. Surround yourself with the right people. That's the other thing, right? You don't want to be trying to build with and you're with people who are just YOLOing every day. I know I don't have an issue with YOLOing, right? Or you don't want to be trying to like start investing and then you're with people who just buy everything they see. You don't want to be trying to practice living beyond your means and you're just with people who just like they just go with their feelings in buying. So surround yourself with the right people, preferably people who are already where you're aspiring to be, so that you can learn from them. You can see how they are doing things, right? You can have some people as a mentor. You can have some people as friends. You can go for some people's talk shows. You can watch their videos. You can get acclimatized to them, right? So there are different ways you can surround yourself. Like you are more of what you surround yourself with. And that plays a role in every aspect of our lives. So surround yourself with the right people, right? And then in countries like Canada, take advantage of tax sheltered investment, right? So we have different forms of tax sheltered investment here. We have the RRSP for retirement and we have the tax free savings accounts, right? So take advantage of tax sheltered investment because you have nothing to lose. You have a lot to gain in terms of avoiding unnecessary costs at the end of the year. Like if you, like the example I gave before in building your emergency funds, putting it in a high interest TFSA account as opposed to regular savings account, there are tax benefits in that way, right? So take advantage of it in building wealth. Or also in terms of investment, it's still applicable. Your TFSA, based on your limits, you can actually invest, right? And you know whatever profit is coming from there. And I get this for investment purposes. I literally mean investment purposes in terms of saying take advantage of tax shelter, not emergency funds, right? So emergency funds is different. For investment purposes, yes, you can take advantage of your tax free savings account investments, not savings. So emergency funds, you can take advantage of tax free savings account savings. You have access to it, and then the interest from that is not taxed at the end of the year. For investment, tax free savings advance, tax free savings account investment, right? So here you can grow your money without the tax issues there, right? As long as you're within your limit, right? And of course, you use it as an investment, not trading, right? So you start having problems with the law and everything in terms of if you start using something that's supposed to be for investment as a trading mechanism, right? Yeah. So just so you're careful on that, right? So there's also the RRSP, the retirement savings plan, right? So that's another way you can build wealth for yourself. Now, government has introduced something called what's it called again? FHSA. That is, yeah. So government has introduced that where you can actually use that to buy your home. So it's combined RRSP and TFSA. So it's your first home savings account, right? So in this first home savings account, you can it works both as an RRSP for your retirement plan. You use your limits to save, then you also invest TFSA. You have access to it when you want to start when you want to buy your home. So take advantage of things like that. Then the plus I was going to mention, which I said in the beginning of the video, right, is the role of your tax back. In some countries, when you file taxes at the end of the year, you get something called a tax back. So if you're still looking for what you can use to start investing, to start paying your debt, take advantage of your tax back. So when you file taxes at the end of the year, the money government gives you back, don't just use it to buy candy. Don't just use it to go to Nando's, please. Use that money wisely. You can split it depending on how much you have. So if you get back 1,000, for example, you can do 500 lump sum towards your debt, and you can do 500 into investment. That 500 you're doing into investment. Remember my video on dollar cost averaging. You can split it. You can do 50, 50, 50 every week or 50 every month. And out of this 50, I'm doing 5 into this, 5 into this, 5 into that, right? Make sure your money is working for you. On this note, I would like to tell you thank you for listening. If you have any question, please drop it in the comment section or reach me, right? What else? I feel like I've missed something. Okay, sorry. Yeah, so also try and budget and financially plan. Yeah, so apply budgeting, right? Budget your what's it called, your finances, your income, your expenses. Make sure you have a budget sheet and plan financially, right? Now this must be why I have a wonderful financial planner for you. If you don't know how to budget, a simple Excel sheet can work for you. But if you need some tools, additional tools to help you, I have a financial planner. Once you go on Amazon and you just search for T-Cook's financial planner, it's going to, you're going to see it, right? And you can choose whichever one works for you. If it doesn't work for you, holler at me, I'll give you your money back. It's tested and trusted, right? So you can use T-Cook's financial planner to plan yourself if you have issues, like if you've been looking for a financial planner one, or if you have issues in terms of planning. Some people, they literally need to write it down to be able to practice it, right? Because in writing you're using different senses. Yeah. So budget wisely, plan financially, use T-Cook's financial planner to plan and budget, and you would not regret it. So these are the few tips I have for you, and this is an official goodbye. If you have any comment, official goodbye for this video. Yeah, if you have any comment, any question, just drop it in the comment section. And if you want to reach me, you can always reach me on my website. My website is just my name and my last name. Thank you so much for listening.